Okay, so the motivation for this presentation was basically an education to institutional investors on the role of basically the financial economist. I mean, the financial engineer is similar to the financial economist, okay? Or the quantitative finance expert. I mean, again, it's just interchangeable roles, okay? And this was a presentation made to a bunch of scholars and some government officials from China. So this was given to them around probably 1999, so about 2000, yeah, so 17 years ago.
Wow, when you say it like that.
Isn't that amazing? I know, isn't that scary?
No, don't say it that.
Amazing?
Yeah,
Isn't
you
that
can't use that
amazing?
word.
Yeah, so a lot's changed in China over the last, 20 years. But again, this was when they came out, they really, it was all new to them. Capital markets and, derivatives and just what I was trying to sell them on was the concept of having a financial economist internal to the institutions as a risk management function within the organization, as opposed to deal people, or other types of people, but having someone who was doing the research and understood, the developments of the markets. So the focus was really, what are the foundations for emerging securities and real estate capital markets? So the outline was, what are those foundations you need for efficient capital markets, prerequisites for the security markets, prerequisites for efficient real estate markets, because you have to have recordation and transferring and mortgage-backed securities. You need all of these things. The role of institutional investors in allocating the capital, you need a very deep market of institutional investors, and institutional investors will not participate in the markets if it's not research driven and if there aren't analyses that are being conducted in the research. And then what is the role of the researching financial economist? And then, what does a program look like? How do you build, a vertical, a research vertical within an institution? And what is its role? So the first thing you have to understand is you have to do a total audit of the system, of the country. You have to look at the financial system in its current state and what the ideal financial system looks like. So a lot of those countries went through privatization and securitization and opened up their economies for capital flows by multinational corporations and institutions into the economy. They had to make a shift from socialism or communism to capitalism. They had to go from authoritarian regimes to democratic political regimes. They had to go from theocracies to rules of law based on rules, based on precedent. So these were like major shifts. And then the philosophical systems, maybe moving from Sharia or maybe Confucianism to a more secular, type of institutional arrangement to really spur the economy. So for efficient real estate and security capital markets require strong public and private sector cooperation, disclosure of government and corporate financial conditions, and institutional and individual investor confidence in both the financial and political institutions. If this is violated, you're going to get a misallocation of resources, you're going to get market volatility, you're going to have underproduction, underemployment, and you're going to have lower standards of living and lower social welfare in the end, and if this is violated. You need to have clear determination and communication of economic and political policy goals. They have to be clearly communicated. Government commitment to long-term financial stability and monetary and fiscal policies that promote capital formation, not inflation, or asset price bubbles. You need price stability that's going to promote consumer confidence and savings, privatization and securitization of the new and used capital stock. China is a perfect example. The majority of the corporations are government owned. There's a lot of inefficiencies, huge opportunities for privatization and securitization, if the party is willing to relinquish control. Strict government and corporate disclosure requirements, GAAP accounting standards, and disclosures. And then obviously anti-corruption legislation that's enforced. And standardized reporting systems for examination, particularly tax reporting and GAAP accounting, or global GAAP accounting standards. Efficient security markets require a strong macroeconomic infrastructure based on the enforcement of private property rights. So when you buy that share, you buy that corporate bond, you buy that piece of real estate, there's clear private property rights in the contract. And there's, the property in the contract is recorded, and then it's used to be able to transfer ownership in the future in exchange for some kind of monetary or some money. Accepted medium of exchange for low-cost investment transactions. You have to have a medium of exchange. And you can't have inflation that's going to deteriorate the medium of exchange. Perfect example is what the Venezuelan peso. Is it the peso that they use?
Yes. Yeah.
Inflation is like 1,000%, it's worthless. Okay. A strong macroeconomic infrastructure consisting of developed legal system with corporate, contract, and securities laws, standard accounting and disclosure requirements, equitable and efficient regulatory tax systems that are progressive, not regressive, and government oversight of public and private financial institutions and markets to mitigate principal agent problems, adverse selection, and moral hazard problems within the institutions. You need an independent central banking system. It's got to be independent, it's got to be credible, it can't be underneath the Treasury, it can't be underneath the legislature or the executive branch. And its primary goals is price stability, interest rate stability, currency stabilization, and becoming the lender of last resort if there is some type of financial crisis. Financial market liberalization, again, the currency has to become convertible. You have to have market liquidity in the stock market, the real estate market, the bond market. You have to have rights of ownership that are enforced and registered, and you need privatization and securitization of the underlying capital stock. What are the outcomes? Capital formation, financial innovation, efficient allocation of resources, and wealth creation and equitable distribution. You don't have concentrations, extreme concentrations of wealth and poverty. Efficient real estate markets require a strong financial and legal system based on the enforcement of private property rights and land use restrictions. To have efficient real estate markets, you have to have zoning, you need land use restrictions, you can't have manufacturing plants polluting in an area right next to a residential community or a commercial. So you need land use. You need market research, due diligence, and risk analysis. You need accepted valuation methodologies and market information, which is very hard to come by in other foreign countries. You need innovative and enforceable deal and tax structures through contracts, negotiations. You need development capabilities. You need a whole industry that can actually develop the real estate facilities and the capital stock. And you need companies that can manage the assets. And you need institutions. You need public and private mortgage institutions that can credit enhance and provide credit, take savings from savers and investors and deploy the capital and lend it to productive assets. You need title transfer, recordation, and you need property insurance system. And you need liquidity in the system to spur transactions for price discovery. Efficient real estate and security markets require strong institutional investor interest based on clearly defined risks and rewards. The institutional investors have to know the risks, they have to know the rewards, and they have to be predictable. Institutional investors are corporations, pension funds, insurance companies, commercial banks, real estate investment trusts, and stock mutual funds. Institutional investor requirements, they require measurable risks and returns, macro and local market stability, clearly defined ownership rights, corporate transparency and communication, portfolio diversification strategy and risk management tools, and exit strategies. Being able to get out, convert, and liquidate their positions. They got to be able to get out. The outcomes: lower information and capital costs, increased liquidity and market efficiency, financial intermediation and innovation, efficient allocation of resources, public and private market discipline, and increased social welfare. So to build the departments, the research prerequisites and the role of the real estate and financial economist, and you could say slash engineer here if you want to, is they have to be able to conduct fundamental and technical analysis, economic, demographic analysis, and they have to be able to do the forecasting. They have to be able to do real estate market analysis and to be able to forecast. They need to be able to do technical analysis of the financial market analysis, and they need to be able to forecast using technicals, and the financial engineering and risk management, and to be able to innovate process and product to be able to function. The mission of the capital market research is to improve the quality of information provided to corporate management and stockholders and stakeholders for decision-making purposes, to identify economic, demographic, and capital market trends and investment opportunities and portfolio diversification. The goals of the capital market research is to create value through management and stockholder satisfaction, to improve the degree of accuracy in economic, demographic, and capital market forecasts, commitment to improve the productivity, the quality, and the diversity of research information provided, to improve investment and portfolio diversification and yield enhancement through risk mitigating strategies and information systems, to assure the quality of information by maintaining a state-of-the-art analytical, computer hardware, software, database, and reporting systems, all simultaneously. So the role and responsibility of the real estate and financial economist / engineer is to act as an independent agent representing the long-term interests of the shareholders through objective and unbiased research, to conduct ongoing economic and capital market research, providing timely guidance to secondary market investments, initial public offerings, and risk and portfolio management programs. The responsibilities of the individuals: provide research assistance to corporate management, analyze portfolios for over-under concentrations in the market, the economy, and geographic risks, and conduct portfolio optimization, to target markets and investments for future acquisition and underwriting based on fundamental economic and demographic demand and capital market dynamics, and to maintain databases and generate and write research reports on a timely basis. Research projects: capital market research reports, analyze and prioritize target markets and investment for future investments and underwriting, economic and capital market portfolio diversification, measuring economic and industry concentrations, correlations between employment and investment returns across capital markets and investments in the portfolio, conduct portfolio optimization using either a passive strategy where you're benchmarking against an index, or active strategy where you're measuring portfolio diversification based on return or risk tolerance or market constraints, and future market expansion, analyzing and prioritizing foreign and domestic capital markets and or company investments for investment for funds. So the type of actual products: corporate management and strategic planning, capital market research, determining the WACC for discounting cash flows and investment decision making and securities analysis, market and economic analysis, product market research and business development. At the portfolio management level, you're providing economic-based diversification, fundamental and technical stock and real estate market research, market monitoring and reporting. For the acquisitions, investment dispositions, exit strategies and development underwriting. We're doing due diligence reports, economic and real estate market research reports, looking at market cycles and knowing when to get in and when to get out based on the cycles. And investor and client relations, actually taking a lot of this and putting this into marketing material that then is used for investor relations and to market to potential clients, to get them to give you their money to either invest and co-invest in properties and securities with you, or to invest in your company's stocks and bonds. So public relations, being involved with professional organizations, and being involved in investor relations. Presentations, research reports, annual reports, quarterly reports, white papers. And that's basically